We are going to start by talking about unveiling bookkeeping secrets. We're looking at how to detect errors in your accounting file. We're going to do this, we're going to dig in, and we're going to see what we can find. If you are a business owner, this is going to be a gold mine for you because you're going to be able to know in a real short period of time whether your bookkeeper is doing what they're supposed to. If your books are accurate enough or in good enough shape to give you good numbers. If you are a bookkeeper, hopefully this presentation will show you some nuggets of how to keep your books clean in different places that you may not have thought to look. We're looking under the hood, if you would. So let's just get started. Like I said, we're going to get into underneath the hood of financial statements and see what we can find, right? High-level overview of what we can detect that would give you that indication, oh, there's a problem, something we need to look at. I'm going to look at a few different places. Balance sheet, your profit and loss, some subledger reports, which are often missed, chart of accounts, and if we have some time, we'll jump into mappings. So now let me take just one quick moment and we will pull up QuickBooks so we can look at something specific. All right, so as you can see, I am in the Enterprise 23 Desktop Edition. What I'm talking about, by the way, is going to be applicable to QuickBooks Online. You just might have to go a couple different places to find it. But this is accounting stuff, so it's all going to apply. All right, so the balance sheet. The balance sheet really is the gold mine. This is where you really look to see where you're at. If everything on your balance sheet is accurate, your bottom line on your profit and loss is going to be accurate. But if this is not right, and a lot of times they're not, your books are not correct. Okay, so don't forget about your balance sheet. It is imperative to look at this. Okay, so the most obvious thing, I think everybody probably would jump in here and say reconciliations, right? And you're absolutely correct. So the first thing I want to look at is where are we on reconciliations? So let's go ahead and pull that up. I'm going to look under Reconcile. And let's pull up checking. I could see that today's date, by the way, in this sample is December 2024. So last month, this was reconciled. Looks good so far. But let's go a little bit deeper. I'm going to look at discrepancies. Oh, you can see from here, we've got quite a few discrepancies sitting in here from deleted transactions. That's not good. That could cause an issue with your beginning balance. But let's just say we're good there. Let's go ahead and take a look at our previous report. So I'm going to pull up that last reconciled report. Now, what I'm looking for here are uncleared transactions, okay? And you can find them midway down. Here we go, uncleared transactions. We have 13 items before the date of this reconciliation period. Why is this important? Well, this will affect your balance, okay? This often gets missed. I harp on my bookkeepers about this. If you have unaddressed, uncleared transactions, the reconciliation is not complete. You have to look at these. Now, there are some that are going to be just fine. For example, I would expect probably these ones sitting right here at the end of the month and with check numbers are just checks that haven't cleared the bank, okay? And this one's on November 30th. So that was just the day before. However, let's just say that we had a paycheck in here dated September 1st. That would be a problem. And that would mean you need to go and search out what is causing that and where that is. Is it a duplicate? Is it something missed? Is it in the wrong account? You can't just bypass unclear transactions, okay? That is going to include deposits, by the way. All right, so that covers that piece. Now, I'm going to look at all and notice none of the rest of these have been reconciled. Not so good. It is best practice to reconcile all of the balance sheet accounts that you can, with the exception of equity and the subledgers. subledgers being accounts receivable, payable, undeposited funds, sales tax payable. Those you can't do an actual reconciliation for here, but you absolutely can for fixed assets. You can for loans. You can for intercompany transfers. So we want to get as many of these reconciled as we can. One, so that you can make sure everything is clear, you have everything accounted for, and two, to also get the file as clean and as condensed as you can. Okay, we do those with reconciliations. Now, next thing I want to look at here, I'm noticing we've got a cash account with a negative $500. Well, we can't have negative $500 cash, so we know off the bat there's something going on here. So if I take a quick look here, what is going on? Looks like we paid $1,000 when we only showed a balance of $500. Something to look at, what's going on there. Again, if we're reconciling, we would have known that or caught that. Okay, we'll be talking about subledgers shortly, so I'm going to skip past this. Undeposited funds. This is huge, guys, and something I see way too often. The easiest way to check if you have undeposited funds is to go to Make Deposits. Okay. In this example, we have 5. 4 of them being on time, right? That looked like they probably could very well be accurate, but we've got 1 sitting in there from the beginning of this year, which probably is not. As a reminder, or for anybody who doesn't know, what undeposited funds is, it is a holding account. So I kind of think of it as that bank bag where you put all your payments in before you take it to the bank. That's what undeposited funds is. So it means you've gotten all these payments in from different customers. You've applied it to their invoices, but you've not yet deposited it to the bank. Okay, and the purpose of using undeposited funds versus posting each one directly into the bank is because this is all going to go into the bank, say, together in a bunch. So it's going to be all of these. So your deposit is actually going to be $7,100. So if you're using bank feeds, which I hope you are, money comes in from the bank feed, are you going to see a $7,100 deposit? If you put these in individually, no, you will not. And then what leads to happening very often is that people will add those deposits as income, right? People think, oh, this is money I got for doing my job. This is income. The problem with that is that you've already coded income on your accounts receivable. So in effect, if you're doing this, you are doubling income. So it's very important. If you have a balance in undeposited funds that is from a long time ago, that has to get addressed, okay? Because that's a huge indicator. I remember one client, not to get too deep into a story, but I had one client that's books were a complete mess and they had pages and pages of undeposited funds. The short answer is it ended up, they had overstated their income by so much because it was doubled, they ended up getting over $50,000 back in a tax refund. That's a nice story for them, but you know, in those years, those books were never right. So that's not good. Okay, so next thing we want to look at really is anything that's negative. A negative number sitting here on a balance sheet, other than specific accounts, like accumulated depreciation should be, right? And some of your equity accounts should be negative draws, depreciation, those kind of things. Everything should be positive. So if you're looking at a set of books and you are looking at a negative number that is not in one of those accounts, like this one, there's a problem, right? So let's go ahead and change this to all dates. Oops, not today, all dates. And see what has happened. Well, you can see we put in 450 and took out 1,000, or we registered 450 and then offset it with this $10,000. Looking at this entry, we can see what's happened here. So this is not set right. So this negative number was an indicator that, haha, we've got something going on that needs to be addressed. And that's really easy to look through and see. So we've got a couple other things in here that you can see are negative. Off the bat, take you 2 seconds to take a look, okay, maybe 5, to take a look and say, that's not right. Okay, so another thing I would look at, prepaid insurance, for example. If you have prepaids, what you should see is in and outs, right? Or is it all one way? In this case, that looks okay because they're going in and out. That means the prepaids are being distributed each month as they should be. Okay. Fixed assets. Fixed assets, the first thing I like to look at to see, because just looking at this, again, this is a high level and not something that I want to go into for hours. Obviously, I could check each source document to verify every single number if that's what I'm doing, but that's not the purpose of this meeting or what we're trying to do today. This is high level, looking very quickly to spot issues. So I'm going to look at depreciation. What is this going to show me? Well, I can see here we had a depreciation entry in 2020. Then looks like we missed 2021, 22, and then 23. So just by looking at depreciation, I can tell that this is off. Looks like we have missed a year-end post. Okay. Continuing on. Oh, one other thing I might mention. If you have loans like this, make sure you have an asset that corresponds to this. I've seen this happen before. Maybe someone's paying for a truck, but it's not showing up as vehicle, right? If you're paying a loan on it through the business, there should be an asset, corresponding asset. Okay, so looking here at credit cards. Same concept here, right? Negative numbers are a problem. I'll just mention that often what I see in credit cards, if they're negative, it's because we have posted payments, like right here, took it out of savings and put it to Chase. We've posted payments without actually posting the expenses. Why is that a problem? Well, you're not getting your deductions, right? That could be a huge number. You want to look at that. Payroll liabilities is another place that tends to get really messed up. Real quick, I'm just going to show you one way to look. Take a look in paychecks. Are you seeing in and out? You should be seeing in and outs. You should see money coming in, right? Or this value generating, increasing, and then when it's relieved and paid to the government. And we're not seeing that. What I would do is probably take a look on the P&L. I bet you someone has stuck those expenses and taxes. That's a common occurrence. So look through, see if everything is getting paid. I'll just skip through this same concept. What's going on? We've got negative. Loans, note payable. Loans and note payable, the easy thing for me to look at, let's just look at the last one. There's no interest, all right? 99% of loans or mortgages are going to have interest, and we do not have it. That will indicate that your balance is not correct and you are not capturing the depreciation deduction, okay? Mortgage. What do we got going on with this mortgage? With that, we have had nothing since 2022 when it was an opening balance. Clearly, we've got some problems in this file. Okay, last part in equity. Opening balance equity. Opening balance equity is used when you are establishing a file, right? You need that extra account to be able to do ins and outs. But at the end of the day, if everything is set up correctly, this will be 0. Obviously, this is not 0, so that is something that needs to get cleaned up as well. All right, we're running out of time. I'll try to pick this up just a little bit. Let's go into your profit and loss. Easiest way here, let's do it by month. And just kind of look across the board. What we're looking for is consistency. Does anything draw your attention that just doesn't look right? Right? That's the first thing. Is your cost of goods sold consistent with your income? Goes up? Does that go up? That kind of thing. All right. Take a look at your income. Jump over here. Just look at total. What I would like to look at is how is the income being posted? Kind of like I told you with those undeposited funds. Another indicator would be if you've got deposits getting posted directly to income and invoices. Okay. As always, negative numbers are a problem. Utilities, there's a negative number in utility. What's going on? That looks like it was probably posted incorrectly. If you reconciled savings, we would know that, but that looks like what has happened here. And this is a really important one. Reconciliation discrepancies. These numbers are not acceptable, okay? This means that whoever was reconciling the account got tired of reconciling and just pushed it, which means that it created an adjusting entry so that your reconciliation would zero. However, I don't think any business would be happy to know that their books are off by $74,000, okay? In general, $5 maybe, right? Maybe something material, 10. Anything above that, no, that's just not right. Another quick thing I like to check, payroll. I see a lot of problems in payroll. What's the problem? These are paychecks. You can see you have all of this different detail that's going on and going to these different accounts with a paycheck. That is what is supposed to happen. However, and I believe this one has a couple. See these down here? We had some checks entered. So maybe we came by and we paid Dan and we wrote a check for $1,000 for wages. This is going to make your wages off because it is not fully allocated. You are showing the net amount instead of the gross amount that Dan actually should have had. Okay, so if you paid $1,000, when you consider the taxes, maybe his gross was actually $1,500 and $500 of it should be going to payroll liabilities. So if you see a bunch of net checks coming in under payroll, your payroll's wrong. And that could be a pretty big amount. Okay. So I'm not going to spend a lot of time on here because I'm running out of time, but tools and machinery, office supplies are really good accounts just to take a quick look at and make sure that nothing is posted there that is greater than say $2,500. Because if so, and it was for one unit, that should be capitalized instead of expensed. Now, I am going to take a quick moment and talk about accounts receivable. This, by the way, is going to apply to payables as well. What we're looking for here is the age, right? How much of this is old? If it's old, we need to look at it. Is it 10 years old? Do we need to write it off, right? Is this the wrong amount? Do we need to adjust it? Or like in this one, we've got a negative number. That's also a problem. What's happened here? I can tell you what's happened here is that a payment was posted to this person's receivable account without an invoice. So there's no invoice, all you have is the payment. So you're not taking that income into account. So those are some things to look at. The other thing we want to look at is whether they match the balance sheet. This is important, something people tend to miss. So we have a total $75,171.78. Let's take a look at your balance sheet for the same period of time. This one matches. It doesn't always match, guys. If it doesn't match, you've got a problem. You've got to disconnect the discrepancy between the subledger and the balance sheet, and that needs to get corrected because your books will never be correct. Sometimes you'll see it in accounts receivable. Rarely will you see it in accounts payable, but where you really see it a lot and where it's vitally important is in inventory. And in inventory, you could see right off the bat, we've got a major problem here because this is negative. QuickBooks does not do well with negative inventory. It can cause a whole heap of problems. So if you want to take a look at the inventory, I think usually the best way to do it, let's see here, and edit. Let's take a look at inventory, quantity on hand. Look here, we've got negative quantity on hand. That's a problem. Also, take a look at inactive. That can cause a problem. We've got an inactive item with a quantity on hand, and especially a negative one. So these are different things to look at. Another thing you want to take a quick look at are your accounts. Is everything going into a expense or cost of goods sold account? Is everything going here into an income account? Like right here, this is wrong. What this would cause is anytime there's a transaction involving this item, it's going to post incorrectly to your financials. Inventory valuation summary. Remember how I alluded to you that this happens a lot? 5524. -4243, same date. That is a big problem, okay? That is causing, that could potentially cause chaos behind the scenes, right? It could cause corruption if it doesn't eventually get taken care of. It's obviously bad numbers, right? When you have negative assets, it's also going to calculate your cost of goods sold wrong as well. So a lot of problems here. That's a big indicator. Check your inventory valuation summary against your balance sheet. Thank you so much. I appreciate all of your attention. Have a wonderful afternoon.